Well, if you got a mortgage quote recently, you're going to need a new one. Why? Look at rates. Rates are upticking once again. We were just 6.9 2 weeks ago, and now we're teetering on 7.5% soon. What's behind today's movement? Well, it's right here. Jamie Dimon's been predicting it, and I've been saying for the last couple years, the government spending, it helped us get through COVID, but then they just keep doing it and doing it and doing it. Okay, so Jamie Dimon comes out and says, Jamie Dimon urges the U.S. to deal with its deficit sooner than later. Why? Well, here's our deficit. You know, I go over this every day. Here it is, and it keeps growing and growing. Look at it. Don't you wish you could make money that fast? Okay, so what's behind all this? Well, it's right through here, and this is what happened today. The 7-year auction attracts below average demand. So if you watch my videos on a daily basis, you understand how this works. So let me explain it to you just a little bit. Here's bonds, and this right here is a mortgage bond that's trading on Wall Street. Here's how this works. The bond price, it's up through there. So you can see the bond price right now is 99.67. Okay, so what investors do is they go in and they buy up mortgage-backed securities, or they buy bonds. In this case, where we saw today, they're buying Treasury bills. Okay, so if there's too much of something out there, what's going to happen is there's not going to be enough buyers in the market for this. So what happens is the prices continue to go down until it attracts a buyer. Think of it as housing. Housing in 2008. Tons of people put their houses on the market and home prices just plummeted because people were just sitting on the sidelines saying, well, there's more and more supply coming, just like you're seeing here. I'm just going to wait for the prices just to crash. And that's what we're starting to see over here because of how much the government is spending. So how this works is if the price of this bond, especially right through here, the mortgage-backed security bond, if the price of the bond goes down, which you're seeing right through here, what happens to rates? Well, they have the flip-flop. They go up. Okay, so how a bond works is this. Let me explain it in its simplest terms. Let me show you how, by paying a higher price, it actually drives down the yields. Okay, so let's say a mortgage bond. Let's say a mortgage bond matures and its maturity value is $100. Okay, just make it simple. And let's say in this case, the maturity time is next year. So today I'm going to give you a low price, and I'm going to show you how by paying a higher price, it's going to drive down the yield. So let's start with a low price. So today I pay you $50. Okay, so I give you $50 and you give me my bond. Okay, and that bond, remember, it's worth $100 next year. Well, the time goes by and we wait a year, and then next year I trade in my bond, give it to you, and you give me my $100 because that's the maturity value. So I gave you $50. I got $100 in return. What was my return on equity, or what was my overall return or yield? 100%. I doubled my money. Okay, so let's drive up the price. Let's say and make it simple. I'm going to pay you $100. So I'm going to pay you $100 today. You give me my bond. I sit on it, wait a year, and then I give you it back. And then you give me my $100 back. So I gave you $100, a higher price. You give me $100 back. What was my yield at that point? 0. So do you see how when I paid you a lower price that you're seeing here, the yields go up? That's exactly what's going on right now, folks, because we have all this debt being pumped out and we have no way to fund it. We don't have enough tax revenues to pay these things, so we have to issue bonds, and the bond market is just completely saturated right now. And we also have China and Russia and other countries not looking to buy a lot of our bonds at this time. It's making the demand even that much less. So the prices continue to fall, and fall until there's a buyer. What's happening during that whole time? Rates are going up. So that's the reason behind why interest rates are up today. So we're going to continue to monitor the news throughout the rest of the week because we have other data coming in on the employment side and also inflation side. So that data is going to come in tomorrow and Friday. It's also going to be a market mover. So how high can these things get? Well, stay tuned because I'm going to make sure you're updated on a daily basis. So my name is Dan Frio. I do this report every day. If you want to check out more about me and my team, go to therateupdate.com. I'm actually a mortgage loan officer licensed in all 50 states, and I'd love to help you. Take care, folks. I'll see you. We got a live event coming up this afternoon if you want to come in there and ask some questions possibly. So check out my live stream. That'll be posting in about 2 hours from now. Thanks so much for watching. Hope to see you in the live event. Take care.